Multi-generational living, where you don't just have the kids living under your roof, but your parents too, is a cultural tradition for many families and throughout history, a financial necessity. As baby boomers continue to retire, they're moving in with their children in record numbers. In fact, nearly 1 in 5 Americans lives in a multi-generational home. In our Sunday Spotlight, NBC's Jolene Kent has a look at a growing trend in the way we live.
3 generations under the same roof seems like something you'd see in a rerun. It's time to think again.
Good night, Jim Bob.
Good night, Jim Bob.
The family tradition is making a major comeback. Today, a record 64 million Americans share a home with parents, grandparents, and siblings. That's due in part to longer life expectancy and increasing costs of living and healthcare. As baby boomers' households expand, the real estate business is, well, booming too. 45% of consumers surveyed say they want a space for multi-generational living.
I started recognizing patterns in the Northern Virginia area as I was starting my acquisitions career, and I started off with land and quickly moved on to houses. I would ride around looking for properties, surveying land, looking at vacant parcels, and I would do it early in the mornings to avoid the traffic. And as I would be driving through the neighborhoods on my way to look at a vacant property or house, I would see school buses and I would have to stop. And as I was driving past and having to stop, I would see grandparents putting their kids on the bus. And I would look up the driveway and it would be the grandparents' children going to work, which were in there between 30 to 50. It made me realize that families were combining households in this area. And this was before pandemic that I started seeing this pattern. This is in 2017, 18, when I finally caught on with my background in IT and engineering. I am trained to recognize pattern interruption, and I recognized that pattern.
The global real estate market was valued at $3.69 trillion in 2021 and was expected to grow at 5.2% by 2030, reaching 5.8 trillion. And we are seeing, based on the World Bank research, that from 2019 to 2022, while we were experiencing the pandemic and many of the challenges, different classes grew very differently in that spectrum, with gold leading the way and residential real estate coming in second place. Gold increased 26% over that time period. Residential real estate went up 21%, and it was followed by debt securities and then commercial real estate. So we were seeing that different classes perform differently. Part of the reason that we are going after the residential real estate is to help homeowners and multi-generational families, but also because the residential real estate is leading the way in the market with a 35% share, dominating the market since 2021.
We are seeing a lot of families combining households and living in multi-generational households. This isn't just happening in the different cultures, but a lot of American families are embracing the trend. In fact, we are seeing majority of young adults living with their family members compared to the Great Depression times. 60 million adults are living in America in the multi-generational family households, which is really big compared to what we've seen in prior years, and also years when we've experienced depression or recession in this country. So it's a huge trend happening where 1 in every 5 adults in the US is basically living in a multi-generational household. Maryland is leading in number 1 with 48% of families combining households, and Virginia comes in at 14th place with 36% of families combining households. So this trend is really apparent across the nation and more predominantly in the place where we're planning to do many of our builds. in the DC metropolitan area, we've seen in 2023, 25% of households being sold for cash. What that means is that in many cases, older adults or parents are selling their homes in order to help younger generations, either financially or with kids, and they're able to roll some of that capital into the new investment, into the larger property. And they're also able to utilize some of those finances to help their younger generations financially. Me and my partner are part of a sandwich generation, many of whom are helping younger kids or helping their aging adults. So we're experiencing a lot of challenges having to juggle work-life balances and also financially support our parents. Being of Ukrainian background, my family is close-knit, and so is my partner's family. So we are really focused in helping families like mine and his solve these problems within the family. Families have not only started to separate during the COVID pandemic when they were locked in homes, but they've also lost some of the strength among the communities. We're looking to build a lot of that up by helping these multi-generational families and increasing the impact within the communities by uplifting them, helping families move to better neighborhoods with better schools, and just really strengthen the communities from within.
It's broken down into three parts. Of course, there's a problem. We have to have a solution for it, and the investor opportunity that's at hand. The problem is we're about 320,000 properties short in this area. Of course, new construction can be built on the exterior, but that does not solve the long commutes that individuals will have to make into the Washington, D.C. metropolitan area, or, also on the way home as well. So that could be between an hour, or it could be 2 hours. So that could be between 2 to 4 hours additionally on top of the 8 to 10 hour to 12 hour day. The solution we have is for the aging and outdated properties that have not been renovated within the last 5 years or so, to make them more up to date with additional square footage by going up a level, adding an additional bump out to the side, back, or, just essentially tearing the property down and rebuilding again. We prefer to do the pop top situation because it allows for investors to get more of a return for the long run on an annual basis. The investment opportunity is essentially we can provide 20% IRR to investors annually.
DC metropolitan area has 3 of the wealthiest counties in the United States, including Fairfax County, the Loudoun County, and Montgomery County. In addition to that, while there's been a lot of changes and drastic fluctuations happening across the nation with real estate in the past few years, where we've seen an influx of housing and housing sales in some of the other states and the prices going up significantly and then dropping, real estate experienced a very resilient, steady growth of 3%. And the area continues to experience this growth, and it also experienced a very similar scenario back in 2008 when there was a recession across the nation, but DC and the surrounding areas stayed very steady in terms of the economic growth. We're seeing people coming from New York, Philadelphia, and from other parts of the nation. About 3% actually said that they're interested in moving to the DC area. In addition to that, there's a lot of growth happening within this metropolitan area. There are many data centers here. The Cyrus One and the Core Scale are building additional data centers to expand job opportunities and job growth. Amazon is setting up their second headquarters in the Virginia area, and we're just seen a lot of stability in this area. Besides that, DC ranked 9th among the most resilient cities across the world. So we're expecting to see continuous growth in this area and just really good real estate activity due to the number of homes that need to be built in this area to accommodate the influx of people coming into the area, and also to support the families that are combining households in this area and moving closer to the city.
During our SWOT analysis, we found that our company is actually unique in 5 different ways from other builders in the area. We are focused on distressed properties, and we have significant experience with infill lots. We are using strategic renovations and a performance-based model to improve and optimize our efficiency and performance. And as we are using the modular builds, they're allowing us to reduce the time for the overall build while also reducing the cost for the builds with key partnerships with other builders. Our expertise in creative deal structuring has improved our ability to create significant returns for investors and really fine-tune our financial model to not only allow us to scale in the area, but also allow us to create a significant impact for the multi-generational families. And our goal to focus on pre-selling will allow us to get early returns for investors, lock in a lot of the deals early on in the process, and we're really not seeing many of the other competitors doing that.
We were very meticulous in selecting builders, making sure with our extensive financial modeling and looking at what properties were and builds were profitable and what the square footage possibly was, as well as the spread, how long they held it, and what was the quality of the build that was done. And we interviewed well over 50 builders in this area. We had conversations with them. I'm able to, with my proprietary software, see what builders are in the area, the quality of their fixtures, the quality of the builds, and the creativity that they put into that particular home. We had interviews, we had conversations, and we only picked the ones that had a long track record. One of the builders has been building for well over 40 years in the Northern Virginia area. They are top tier when it comes to having a system, a team where they have the site manager, the engineer, the designer. Everybody is in-house. And to me, that goes a long way because everyone is already using a system. And what we're doing is applying our marketing and acquisitions to the front of that. And we're applying dispositions and marketing to the back of it at scale. And so we wanted to make sure that a builder that we selected was top tier, that their systems were in place, their marketing was in place, and they knew what products worked well, sold well, and could implement at scale and speed. Upon that, we picked 3 individual builders to work with, and we're very happy with those selected partners. Just due to the population growth and housing demand, when the interest rates and people were working from home, they went out. They moved out to the rural areas, but now the demand is, being met, and people are, as far as their employers, are asking people to work a little bit more of a hybrid, to come back into the office And people just want to be closer to the amenities and attractions and events, schools, that the metropolitan areas provide in the cities surrounding the Washington, D.C. metro area. Of course, there's a price, appreciation as well. And that buyer preferences are changing again, because the interest rates were lower and because of how flexible their employers were, people had a change of heart in what they were traditionally doing, and they wanted additional space to be able to work from home. But guess what? Now the employer's calling them back into the office, and they just need to get a little bit closer to their employer, have the square footage so if they want to work from home, but also be close enough if they need to commute, they're not spending 2 hours each way just to get there. Our process is we acquire it via my proprietary acquisition methods, where we are able to see a lot of data and things that other competitors, other investors are doing in the marketplace, where we're not reinventing the wheel. I can see exactly what they're doing before and after, how they're holding the property, what the actual average spreads are, the average acquisitions, so we don't overbid or underbid for any parcel or property that we put under contract. Of course, on the second step, our process is the site, the design, the 3D modeling, and the pre-sale. We deal with all trusted builders that have an entire team in-house, which makes it easier for them to communicate and be efficient. If you look at, as far as the 3D modeling goes, it's good to be visual. And we like to and want to implement the 3D process to give the buyer a visual representation of what that property will look like, to give them a better understanding. And it also helps out during the development process and building process as well. And then we'll also take that and implement the pre-sale, which we will take that 3D design and list it on the multiple listing exchange, aka the MLS, to secure a down deposit for that particular property. And of course, we do the disposition and the profits to LPs after that property has been pre-sold or sold on the market.
Our founder has a unique ability of connecting people and resources and really building a unique business that can scale and successfully operate over multiple years. And he's just able to see how to creatively put things together. Mantelli Scott and I have been friends for many years, and I've seen him do this year over year with different businesses, helping them scale, helping them grow. He's helped my businesses do the same. I used to come over his house and we would sit around and he would give me different strategies on how to grow my businesses, some of which are still applicable today, believe it or not, because we kept the notes and we were joking about it the other day. But when it comes to the Proflic Capital, Mantelli has an extensive experience over the past 12 years in the real estate industry and acquisitions. He's also focused over the past 5 years in building a core system for acquisitions, the proprietary system that we're using in this business. And his value add experience, his systems and automations experience, marketing experience, and just overall creative deal structuring has enabled us to build a unique financial system and business model for this business. It allowed us to pull in the right partners for the board of advisors, the right partners for the business, the right staff for the business to run the operations. And he is truly spearheading the financial outcomes and the way that our business is going to run efficiently. And I am honored to be included in this process and be part of it, and also to see a lot of this magic unfold.
Maria Swartz has been my long-term friend for well over a decade. We've went through our own individual ventures and have been colleagues and bounced things off of each other, traded, I guess you would say, methods to be more efficient in the positions that we were in at that time. We've always looked at creatively and always wanted to work together, but our mission and purpose had to align. And this was something that both of our parents are around the same age. When we had fun and talked about things and talked about business items, at the end of the day, it was, hey, how's your mom? Hey, how's your dad doing? Same thing on my end as well when we would have conversations. And we started to realize with the multi-generational homes that both of our parents would be in similar situations, as well as all of our other friends would be in similar situations as well. And we joined forces on this because we had a common vision and goal to see the process of this through. Maria is great. She has a doctoral in international business, project management certified, very proficient in numbers and performance. And I needed someone to essentially would have my back in this endeavor. And she has been amazing as far as modeling and helping us through the process, and just an all-around great person. Now, if you get to Mike, he's actually a CFA, Eichner Partners, and he's great with financial modeling, and he's just an all-around great capital raiser. He's had an expertise with multiple different ventures. He has multiple conversations per week, and he also has an internet marketing and marketing understanding that if we're doing something that will not produce results, even though both of us as well, me and Maria, both have marketing backgrounds, there's a third person that we can also rely on to give us those expertise. Then we have our board of advisor, Amit Berry. This is one of the gentlemen that has shifted me and motivated me to go towards the pop-top construction and spec home building space. He's a second generational home builder. He's been doing this for well over 10 to 15 years. He has done well over 100 to 200 builds. He's done townhomes, he's done communities, he's done subdivisions. His expertise in this very market where we're creating the investments at, he's already doing it. This is not a model that has been, we're not creating the wheel. Our board of advisor is doing this right now as we speak. So it's great to have someone on your board that has your back and has the expertise and understands all the jurisdictions in this area to make sure that there are no hiccups that happen throughout the process. I look forward to, growing as we go through this process to fill in the individual roles that are needed. But we have a great core and solid team.
Proflic Capital is a 10-year close-ended fund with a 30 million partnership size. We are looking for 500,000 minimum investment, and we are offering 65-35 split with an 8% pref and a 2% management. We came to these terms as part of our financial analysis and stress testing multiple scenarios and many different variations of what the fund could offer. Our team is going to be putting a huge effort into this development, and when we did the financial calculations, we were looking for the best return for our investors and also meeting the needs in the market. As part of that analysis, we've gone back and forth over multiple months, trying out different models, testing to see what would generate the best returns, and just seeing how can we creatively put this together to make the most sense in the market with our goal and our missions. So in our calculations, we were able to get to a 4 multiple on the invested money, as well as an IRR of 30%. Now, in the best case scenario, we were able to get to 35% IRR. In the worst case scenario, we saw 24% IRR. So when we're telling you that we're offering or we are targeting 20% IRR returns for our investors, allowing you to double your money every 5 years, we are being very conservative, and we have really good success opportunities in this and confidence in being able to fulfill this model with ease and efficiency. We look forward to you being part of our fund if you're one of the lucky investors, and we'll see you on the other side. Book a call with us.